Welcome to this explainer. Today, we're taking some seriously dense regulatory directives and turning them into an absolute survival guide for your wallet. We're unpacking a massive, fundamental shift in how banks are actually allowed to interact with you. And trust me on this one, it is a total game changer for consumer rights.
Okay, so let's just dive right into this by asking a question that, honestly, we've all probably muttered to ourselves while staring at our phones in total frustration. Have you ever felt tricked by your bank's app? Maybe you accidentally signed up for a service you absolutely didn't want, or you couldn't figure out how to cancel a subscription because the option was buried under like 10 different confusing menus. Well, you're definitely not alone. And more importantly, the regulators have finally noticed.
So, to really answer that question, we need to talk about the official industry term for those frustrating little tricks. They're called dark patterns. Basically, a dark pattern is any deceptive design that's intentionally crafted to subvert your autonomy. It's when an app's interface is engineered not to help you, but to actually trick you into making a choice that benefits the bank completely at your expense.
Now, this isn't just some abstract tech theory anymore. We're looking straight at the Reserve Bank of India's 2026 Amendment Directions. This official document essentially draws a massive line in the sand. It officially outlaws these manipulative digital practices and those super aggressive sales tactics across all commercial banks. Here's our roadmap for today's explainer. We'll be going over the new banking safeguards, decoding those sneaky dark patterns, redefining mis-selling and consent, looking at how they're taming the sales agents, and finally, covering your rights to actual compensation. All right, let's kick things off with Section 1, the new banking safeguards, and specifically setting the timeline for all of this.
So, while these directions were officially issued in June of 2026, major institutional changes like this take a minute to implement, right? Banks essentially have until January 1st, 2027 to completely overhaul their digital interfaces, audit their apps, and thoroughly retrain their sales teams. So they're using this runway right now to eliminate these prohibited features from the exact apps sitting on your phone.
Moving right along to Section 2, decoding the dark patterns, where we get to see the traps finally revealed.
The regulators actually provided this really fascinating annexure that lists 11 specific deceptive tactics that are now explicitly 100% banned. I mean, just look at this list. From false urgency all the way down to trick wording, it honestly reads like a playbook of every single annoying digital experience you've ever had. By actually naming these tactics, the regulators are totally stripping away the bank's plausible deniability. Let's look a little closer at how some of these actually work.
This perfectly illustrates how these kind of abstract legal terms translate into those incredibly frustrating real-world experiences on your banking app. For instance, take false urgency. That's that fake little countdown timer literally pressuring you to accept a pre-approved loan right this second. Or basket sneaking, which is when you apply for a regular loan and suddenly realize they've just quietly slipped premium fraud insurance into your total amount by default. And of course, forced action, that relentless, annoying pop-up for a personal loan that absolutely refuses to close no matter how many times you tap the screen.
Now, what I find super interesting here is the specific call-out of something called confirm shaming. This is where banks basically try to guilt trip you into keeping a subscription or staying on a marketing email list. You try to unsubscribe, right? But instead of just a simple, polite, okay, the app forces you to click a button that says something humiliating, like, no, I prefer to stay uninformed about great deals. The RBI is saying, loud and clear, that this kind of psychological manipulation is absolutely unacceptable now.
They're also cracking down on a bunch of other really sneaky behaviors. Look at drip pricing. That's when a bank advertises this fantastic, unbelievably low interest rate, but completely hides the massive processing fees until you've basically already confirmed the transaction. Then you've got nagging, which is exactly what it sounds like, constantly bothering you to enable tracking cookies after you've already said no. And honestly, my personal favorite to hate, trick wording. This is when they use those insanely confusing double negative checkboxes, like uncheck this box if you do not want offers. It is designed specifically to trip you up, and it's finally going away.
Okay, let's jump into Section 3, redefining mis-selling and consent, or as I like to call it, the power of no.
So, the official definition of mis-selling has been vastly expanded here. It's no longer just about stopping straight-up obvious fraud. Mis-selling now strictly prohibits pushing unsuitable products on you, even if you technically, legally consented in the fine print. It also covers giving misleading information or engaging in a really problematic practice known as compulsory bundling. The crucial point here is that a bank can no longer hold your main request hostage. Compulsory bundling is basically the practice of making one product conditional upon another. So, practically speaking, that means a bank literally cannot force you to buy third-party life insurance just to get your basic personal or home loan approved. You now have the absolute, undisputed right to choose exactly what you buy, and more importantly, what you don't.
This contrast we're looking at is really the heart of the entire new regulation. Under the old tactics, banks relied heavily on pre-check boxes and burying the fine print, basically making yes the path of least resistance. But this new RBI mandate, it changes the game completely. Consent must now be an explicit, unambiguous choice. And here's the real kicker. Pay attention to this. The default choice on all banking platforms and digital interfaces must now explicitly be no or I do not agree. You have to actively choose to opt in. They absolutely cannot opt you in by default anymore.
Moving into Section 4, Taming the Sales Agents. Here we'll look at the strict new code of conduct. The regulators have established a seriously strict new code of conduct for all direct selling agents, or DSAs. So, no more mystery callers or late-night harassment during dinner. Agents are now officially legally limited to calling or visiting strictly between 9 a.m. and 7 p.m. Period. They also have to wear clear identification if they approach you in a branch. They are legally required to respect your Do Not Disturb registry preferences, and they must disclose all fees and interest rates completely upfront before they even try to close a sale with you.
And finally, Section 5, your rights to compensation and the actual path to getting your refunds.
Listen, if you ever find yourself a victim of any of these dark patterns or aggressive sales tactics, you now have a very clear, mandated path to resolution. The new rules give you a strict 30-day window, starting from the time of sale or from when you actually receive the terms and conditions to lodge a formal complaint. And here's the best part. If mis-selling is actually established, the bank is legally required to cancel the sale, issue a complete 100% refund, and even compensate you for any financial losses you incurred because of their unfair practices.
But honestly, the burden isn't just on you to play defense all the time anymore. Banks are now legally required to actively audit their own software. They have to conduct thorough user testing to proactively hunt down and remove these deceptive designs before they even reach the screen on your phone. It effectively shifts the responsibility from the consumer having to constantly dodge traps to the bank having to remove the traps entirely. Ultimately, this explainer highlights a massive, much-needed win for consumer autonomy. The sneaky tricks and digital traps that have basically defined banking apps for years are finally on their way out. So I have a challenge for you. I want you to open your own banking app right now. Just look through the menus, check out the pop-ups, look at your default settings. Can you actually spot them using any of these soon-to-be outlawed dark patterns before that 2027 deadline hits? Keep your eyes open, know your newly protected rights, and take control of your financial digital experience. Thanks so much for joining me today.